Before we start the panel, I would like to introduce the moderator, Yvette Lin. After several years of experience in venture capital, Ms. Lin realized that human resources is the most significant success factor in the internet technology industry. Ms. Lin's platform studio recruit builds a bridge between the companies and talents for internet elites. Prior to founding Studio Recruit, Ms. Lin was an investment associate in AppWorks Ventures, Asia's biggest startup accelerator, and an investment banking analyst at Yuanchan Securities, the leading securities firm in Taiwan. And let's welcome Ms. Yvette Lin.
Hi everybody, it's my honor to be here on the stage. I'm Yvette. My company Studio helps everybody to hire top talents from Taiwan and Asia. And I think the reason why I'm the moderator for today is that because I have 3.5 years of experiences of venture capital investment and as well as investment banking experience. So today I will first start to have our panelists to introduce themselves. So first we have Tony Huang, venture partner of W.I. Harper Group.
Hi everyone, so my name is Tony Huang. I'm originally from Taiwan. I've been in the States for more than 33 years. So I started my career as a commercial banker. But it's not any type of commercial bank, it's actually focusing on technology companies. It was called Silicon Valley Bank. So it was there for about 10 years. So we work a lot with venture capital firms. And I focus primarily with Asian venture capital firms. So SVB invested our own capital in about 500 venture capital funds worldwide as a limited partner. So W.I. Harper was one of those funds that we had started. We actually invested in their first fund back in 1993. So that's started my relationship with W.I. Harper. So I was an LP in the fund representing Silicon Valley Bank, and about 4 years ago joined the firm full-time as a venture partner, helping them source deals and managing a number of their portfolio companies and being the liaison between a number of their Asian relationships, both from LP and corporate strategic standpoint. So the firm was actually founded back in 1993. Today we manage, cumulatively, we have raised 8 funds. We just last week closed our most recent fund, fund number 8. The fund size is about 175 million, and that brings our cumulative total asset under management to just slightly under $1 billion. So, but in terms of active fund under management so between the current fund and the 2 prior funds, it's about $400 million that we currently manage and deploy out of. So we're primarily early stage focus. Generally sector agnostic. So our model is to basically identify leading technology companies from Silicon Valley and help them expand in Asia and more specifically Greater China. So we actually have office in Taiwan and Beijing and of course in Silicon Valley as well. So we have about 40 professionals that covers the 3 regions. So in terms of portfolio allocation, it's about 2/3 Greater China and 1/3 in Silicon Valley.
And next we have Donna Lee, EIR from K5 Venture.
Hi everyone, my name is Donna. I am also originally from Taiwan, but now I live here. A little about myself, I started my career as a lawyer and then at one point started a company in the sports and entertainment business, raised multiple runs of funds, sold the company to Cox Communications, and joined one of the venture funds that invested in my company, which is K5. And K5 is an early stage venture, so we really look at companies generally from C to A, sometimes B, but we like to be in the C to A round. We are also we essentially look for companies that are essentially fast scaling companies and generally across the US, and we have some investments in the Greater China as well. That's it.
Okay. And next we have Kitty Low, founder and CEO of Manhattan Hotel Group.
Can I speak Chinese?
Of course.
Yeah. I'm Kitty Low. 我以前主要是在做股票上市，那投资 biotech、high tech 很多，帮很多公司股票上市。现在台湾有很多大型的股票上市。我以前在台湾证券公司帮很多大型公司股票上市，我们这个团队。那现在来美国退休，主要 focus 在 hotel 的投资。那也把自己的 hotel 在台湾做股票上市。那股票上市的好处是要集资很容易，那财务也非常的透明。台湾的股票上市非常容易，大概照着它的步骤走，大概1年、1年半就可以股票上市，集资也非常容易。那我现在就是除了比较创新的产业之外，大部分都是一直持续的在投资旅馆。谢谢。
Okay. Last but not least, we have Jennifer Zhang, partner of CyberNow Z Founder Venture.
So my name's Jennifer, and I'm actually not really, from started my career from the investment side. For my past, the 5 years ago, still really wanted to be a content creators. Then I come to Hollywood, do a lot of things related to innovation industries. And later, because actually I co-founded early stage entrepreneur community, which called Plus U. Then I'm more getting close to the entrepreneurs and know what they're doing. And even I received a couple a big documentary from China Central TV and Ministry of Technology from China, and got approached more entertainment related startups and local startups, and I realized, no, this is a great opportunity to increase, the whole ecosystem of Silicon Beach is getting more mature. Then I jumped on board to decide to do something related to early stage investment. So now I work with the Cybernets. So Cybernets is pretty large fund in China. We actually manage over $10 billion assets from early stage to the pre-IPO level. My job is based here and focus on early stage in 3 areas. One, entertainment technology, which a lot of people are recently kind of interested in the virtual reality, those things. It's actually belong to the area. So another part is advanced materials, which because we have a huge public company, we was our portfolio company before, and the IPO in China had a lot of needs for that part. And third one is healthcare. So as we mentioned, in China, there was 2 things recently is not hot, very hot. One is a big entertainment, which is, something you live a very, spiritually very happy. And the second part is like a body, like for your own, health care. That's we call the concept called the great healthcare industry. So including how to work out, including the big data, how to interface your daily healthy life. That's things we call like great healthcare. So we also focus in that part. So that's mainly 3 parts we're doing here.
Thank you, Jennifer. Okay, since today's topic is about founding and investment, I have several questions listed already that I want to ask our panelists here. So first question goes to Tony and Donna. What's the recent interesting investment you have ever done? Would you mind to share several investment recently, and which company, what do they do for business model, and why?
I'll take a crack at that. So like I said earlier, we're primarily sector agnostic, right? So we cast a pretty wide net. So from a investment focus standpoint, I think we like to be considered as opportunistic, right? So we cast a pretty wide net. I mean, there are probably not that many fields that we absolutely don't touch, right? But our biggest thing is we want to make sure the company operates capital efficient. Right? That's a big thing for us. And that, for us, the criteria is this something we can add value, given our knowledge base, given our contacts in Greater China, in Asia, do we think this technology, this company, the product or services has a market in China that we can help them? So that's our primary angle. So given that, we cast a very wide net and we look for basically the best entrepreneur and the most interesting technologies. Our biggest bet yet in our 25-year history. Is actually the company is still in stealth mode, so I won't mention the name. But we wrote a $10 million check, right? So given our fund size, that's a pretty big bet. This company actually developed a nuclear fusion reactor, right? If you think about it, you want to conceptualize it, is basically what you see in the Iron Man. That's how crazy the idea is. But if this thing works, it's going to be the first $1 trillion company, right? We're talking about sustainable, clean energy. We obviously spend a lot of time trying to validate a technology, and I can share with you basically is that they have demonstrated that at least in the laboratory environment, it works. There's more energy output than energy input, and they can sustain the state of the fusion for more than an hour, right? Which is quite remarkable. So we have big hopes for that, and obviously we have a lot of money riding on that. So that's one company that we recently funded that we have big hopes for. Maybe I'll just mention maybe one or two more other companies that I personally been more involved with, because we actually have a portfolio of more than 100 companies. It's a company called Synthego, right? It's great team. They came out of SpaceX. So it's a combination of mechanical, software, chemistry, and biology. So what they're doing is building a purpose-built apparatus to automate biology research, right? And the way we like to think about it is if you think about PC, what Amazon Web Services did to the PC industry by moving the computation to the cloud, we think the traditional way of biology research still done in a laboratory in a very manual process could be more efficiently automated and leveraging the power of the cloud, right? So the company is making great progress. We made an investment alongside Founders Fund, which is, of course, the fund started by Peter Thiel, the guy that started PayPal, and also Menlo Ventures. So our value add is trying to bring this company to market in China. So their first go-to-market product is synthetic DNA. So synthesizing DNA, more specifically, the product is oligonucleotide, right, which is a single-strand DNA. So that's, I think, is one of the more exciting companies that I've been involved in my career. Again, the company is called Synthego. It's basically short for synthesizing oligos, DNA, right? So that's just another example of companies. So we think there's a breakthrough technology, there's a market potential for Asia. Yeah, just a...
Okay. Thank you, Tony. Then Donna?
Okay, I'll also take a crack at this. So our firm, we also don't focus on any specific sector, like Tony said. We really try to pick the companies that our venture partners have experience in. So this way we can help the companies grow as quickly as possible. And usually, so that's how we generally look at companies. And we also cast a wide net just to see whatever is out there and really try to optimize on the opportunities. And with that, what is really interesting is that sometimes you hear about firms investing in entrepreneurs, and generally it's about passion. But we had a recent investment, and by recent I mean within the last 4 years, so it's not that recent, in these two founders called a company called Connectifier. They were just acquired recently by LinkedIn. The difference between these two founders were that they came from Google, and generally they, instead of an entrepreneur that would focus on a specific topic and based on passion, wanting to make something like a great idea, they were very methodological in terms of what they wanted to do. So when we first invested in them, they didn't know what they wanted to do, but they had a specific way of testing out the market and then be able to pick up the signals very clearly to determine what company they want to build. And that's actually very rare when you see in founders, because most founders is more based on an idea and a passion. So essentially, in that area, we invested in the founder, and it worked out. And another investment that we had recently, well, no, I'm gonna pick another one. Is it football? Fleetwood. We also had another one that I think is kind of well, it is interesting for different reasons. One of them is in the real estate commercial market. They are called Dixie. And that one, too, it's we also invested in the founder, and then the idea is actually not that complicated, plus the margins in that field is kind of good, so that one's a little bit of a no-brainer for us, but at the same time, that one's probably not gonna be a home run like the ones that Tony had, right? But at the same time, that one we look for a founder and how his passion and the way he's able to capture people every time he spoke with somebody. So those are, I guess, two of the investments. That's pretty fun for me.
Thank you, Donna. Okay, and my next question first go to Jennifer, then Tony. That we all know that both of your firm, you have office in Beijing. Tony has another office in Taipei and also California. And what's the benefit of a VC has cross-border resources? That what can your portfolio company leverage your resources? So first Jennifer, then Tony.
So I think it's some benefits definitely of the years. You know, when you work, when you sleep and somebody actually help you work, that's very helpful. Definitely when we actually present some kind of like, you know, slides and want to got some like quick reports that have an overseas office can assist you. I'm just kidding. Usually we don't do it that way. So I think for cross-boundary funds, usually the first benefits is think about like, you know, when you try to pitch the idea in like start a company you want to invest in, you can say, okay, so you have current like Chinese, Europe, whatever local stories. What about like your products go to a bigger market, go to globally? How would it be like? So that's a way like you leverage your cross boundaries to helping you to do the deal sourcing parts. Because a lot of things, a lot of company, especially the device company, come to me and first the question is like, can you help me to do the manufacture and get the prototype in China? So Shenzhen is already become the capital of all the makers because that you have that are really powerful for manufacturers to helping them to quickly to do their prototype. That's like, you know, that's a one very just the starting angles. And later, a lot of startup company going to have a lot of benefits related to capital, related to like also human resources and also resource market. Before, usually when a Chinese background, you know, investor come to here, they want to always have think like, we want to pick up something good here and bring them back to China, like Baidu copy Google and like, you know, a lot of similar companies. But now, because like especially in Great China area, we have actually stronger power, especially when you see the Alibaba, it's much stronger than eBay. So you see both market actually getting more equal. Then you have a better story you can add into the local companies that you can, okay, now you're a US company, you think it's good. What about to go to as international companies? This is things happen to a lot of virtual reality company now we see in here locally. Sound like, you know, with a Meta. So think about this is a recently launched like, you know, this early this year, and they're doing the AR headsets. And before that, they were really hard to actually cut the cost for manufacture then. And I know a lot of device companies, a lot of big name companies in China who actually have a very good supply chains and like make it the cost lowers. So in that ways, Meta can release very early. That's one way they do. And second, like, you know, a lot of, you know, like recently, most Chinese content companies here feed a lot of studios and feed a lot of VR companies here. When I come to Reload VR, one of the top 5 virtual reality gaming company here, the investor actually mostly from China, and recently have 5 projects related to Baofeng, related to Baidu, related to 360, those big company in China. And because these the projects, they fit themselves very well and get enough capital to run the whole things and trying the pilot contact development. So I feel like usually people think about like, you know, before like 20 years ago, we're trying to bring the great technology and back to some Great China areas. You see like we have advanced something, but now both market equal. So the story becomes like from local to international. So think locally, but how you can brace globally. That's how a lot of Chinese company, like if you have international, especially in the Chinese back office, you can support you to finish this kind of story. That's my parts.
Thank you, Jennifer. Then Tony.
Sure. So first of all, I want to back up a second. So talk about the history. So maybe to give you some context. So even though W. Harper is headquartered in San Francisco, that's where our back office is. But because of the background, the principles that founded the firm, including I'm not the founder, but a lot of our firm, a lot of the principles involved are of Taiwanese descent. So our first fund is actually a Taiwan-based fund. So we started our investment activity in Taiwan in 1996. Our first fund is a Taiwan domicile fund. We raise money from Taiwan. We invest that fund in Taiwan. So obviously back then in 1996, you're talking about a lot of, especially in Taiwan, we're talking about computer peripheral semiconductors system type companies, right? We actually invested successfully in a company that made the first optical mouse. It's actually a Taiwanese company. It's had a successful exit. It's a publicly traded company. So from that origin, we actually expanded then into mainland China, right? And basically catch the wave of the whole internet boom in mainland China. We had a very successful exit in a company called Focus Media, which had a outdoor media, advertising display, as well as a internet data center called 21 ViaNet, right? It's the first carrier-neutral data center in China. So back to the question of what's the advantage of having multiple office locations. Number one, I think we can leverage our learning from each of those 3 regions. So oftentimes internally, right, let's say our Taiwan office identified an investment opportunity and bring it up to the broader team. So our China team can chime in, our Silicon Valley team can chime in and say, well, we saw a similar concept, a similar team here, and we can compare and contrast the advantages and disadvantages, the strengths and weaknesses of that particular team compared to the other ones that we've seen before. Because chances are a lot of the business models are very similar across these companies. So that's one way we can help vet these deals and make a better informed decision. So that's one angle. Second, coming back to our whole fundamental thesis of why W. Harper was founded, our value add is helping these companies expand into Asia. So it's vital for us to have on-the-ground presence to act as so almost a de facto business development extension arm of these companies, right? We routinely take our U.S. portfolio companies on roadshows in Taiwan and China to introduce them to strategic partners, manufacturers, and suppliers, customers, etc. Back to what Jennifer was saying earlier, and this again ties back to Taiwan. Taiwan has traditionally been a manufacturing-driven, economy, right? Export-driven, but primarily manufacture in IT and what we call OEM and ODM. So the struggle of Taiwan right now is trying to elevate its industry to go beyond, OEM and ODM. So to that extent, we actually founded and a major investor in a company in Taiwan called Hardware Trek, right? So what they provide is an online platform that allow global companies and primarily, U.S. or European startups primarily that are interested in building a product, and these are by nature, a lot of them are IoT related, right? These startups have a great idea for a product, they designed it, they have no idea where to go to source manufacturers. So we purposely built a platform called Hardware Track where these companies can come onto this platform and find other experts to collaborate on design and through our help, engage them with the right manufacturers. So that's one way we think that we can help Taiwan through our presence and through our efforts in these areas.
Thank you, Tony. Okay, since this panel is about founding and investment, and I think we do believe that we have a lot of investors here, and what investors care about the most, one of the things is about exits. So my next question will go to Donna and Kitty about different exit experiences you have that Donna once sell a company, right, get acquired by another one. And Kitty has several different capital markets experiences for IPO companies. So my next question would be, would you mind share about your exit experiences before, no matter it's your own company or you help your portfolio company to exit? So like Kitty.
OK，我先介绍台湾的资本市场，还有中国大陆资本市场，还有美国大陆的美国上市公司的资本市场。这个台湾现在在回台第一上市是非常容易的，它资本额只要2000万美金，第一上市，第一上柜只要330万美金，它的这个获利也只要1.2个 million 的这个获利，那上柜也只要15万美金就可以。那如果是创新版、创柜版是只要资本额在150万台币以下。可是经由辅导机关，拿到那张核准函，也能够在创柜上市。那在台湾上市的一个好处呢，台湾的寿险公司、银行、券商，他们不可以随便投资海外的基金，还有海外的这个创投，也或者是海外公司。可是如果你有创新的公司，在符合它的条件之下，它是可以投资你，所以你可以有很多股东是来自于证券公司、寿险公司还有银行，所以说这个是很少人知道的一环。所以如果说像我记得我以前我们的团队在帮华硕上市的时候，还有以前我们在接触鸿海，那个时候是很早，在1991和1996年。那台湾的法律在这方面是很保护台湾当时的 IT 产业，所以说寿险公司、政府基金还有银行、券商，他们的钱往这边投。那我记得王永庆说过一句话：我整个台塑的产业，我投资这么多年来，还不如我投资台积电。所以说，如果有兴趣到台湾上市做这3个创柜版。创新版或者是第一上柜、第一上市，你们只要符合它的条件，他们的这个台湾的有很多寿险公司是可以投资你的，这是很好，因为这是台湾的法律。像比方说，我记得我在2008年在台湾买旅馆的时候，台湾的六大辅导产业，我们的利息，我记得我在买在西一路的一个旅馆。利息，我当时贷款的利息是1.9%，可是政府补贴我1.5%，所以我只要付0.4%。我把贷款出来的钱，我拿去做定存，还有1.5%。我利差的套利，我赚了1.5%。还有我的装修是政府送你100万美金，你去拉皮整骨是不用还的。还有它的 housekeeping，你如果是用handicap 之类的 housekeeping， 政府是补贴你六个人的薪水，看你的房间的 size。台湾有很多鼓励的产业。那我现在是在美国做旅馆投资，我一年大概看30个到50个旅馆，我在筛选旅馆。那我们现在的投资当然是因为有 leverage， 但是我选择旅馆是 location， 还有当地的建设，还有这个 star report ADR。那我主要是就是说，扣掉银行利息，如果有20% 到30% 以上的获利，然后还有看当地的这个整个产业趋势，还有当地的经济成长，那个我几乎都会投资，而且我们投资很快，大概2个月就 closing 了。大概那至于说高科技或者生物科技。我们也有兴趣，但是我们评估是比较小心一点，因为从30年前你做电脑业、高科技，现在后来是做biotech， 那现在我是比较 focus 在资产，是比较 real estate。我在睡觉的时候也有人可以帮我赚钱，那比较稳的行业就是我其实我英文很不好，那我是很鼓励年轻人，台湾有很多。政府有很多资金，它的法律是很鼓励，很给你们钱。那你们只要符合那个法律，寿险公司、银行，它有一个法律规定，还有证券公司，每一个券商，他们的自营商有很多的钱都可以投资你们。 那所以说，那上市的条件也很简单，这样子。如果你们需要人脉，我可以帮你们介绍。
Thank you, Kitty. I have something to add on that. That in Taiwan, the capital market is actually very friendly to small cap companies. And just as she mentioned about 第一上市,第一上柜, that's if you are a foreign company and your capital size is good and your revenue is good, but you don't need to be super big. Actually, Taiwan's IPO market is definitely one of the places you should consider compared to NASDAQ or Singapore. And besides, we have 70% of shareholders are public, which means that if you are popular on media, then your stock price will be very good. And the buying power from insurance company and banks and also security house are very strong as well. So I think that's a very good advice. And besides, yes, Taiwanese government has a lot of policy that's friendly to foreign investors. So it's definitely one of the places to be considered. Okay, then next we will have Donna to share about the exit story.
So with our firm, we're pretty lucky that we had a few exits already, and we haven't any IPO. So most of our companies, because it's being acquired by another company. And I think all the exits are all a little bit different. So the company I had previously mentioned, Connected Fire, that was acquired by LinkedIn. LinkedIn has been trying to acquire them for over 2 years. And at first, it just couldn't come to an agreement because the earnout was too long. And the founders just didn't want to do that. And then, eventually we were able to do something when they actually went through, and I think the deal was announced a few months ago. So again, every exit is a little bit different. And then we had another exit, and we had an investment in a company called SignNow. It's a virtual e-sign signature platform that also used to do notary, and that was acquired by Barracuda. And now I think they operate under the name DocuSign. So that exit was actually very, very messy, and then most of the investors were not happy at all during the exit process because depending on what the founders wanted and then the negotiation process. And then those ones, for example, they kept the investors as far as possible during the negotiation process. So most of the investors didn't really know what was going on until the deal was done, and everybody was a little bit in shock. And so that's not a recommended thing to do, and I don't think generally that happens. But also we had bad experiences too, because we had this one company, Stratos Card. I don't know if you guys have ever heard of the credit cards that allow you to consolidate multiple cards into one and you just carry one around. Yeah. So I think the most popular ones are Coin and Stratos, and this is actually a very unique investment for us because we actually have investment in both Coin and Stratos and our competitors. But that's very unique. Generally, that doesn't happen for a venture fund. So that one, they're both still under operation. And I don't really want to name exactly which one because that might be too obvious because they're still fully operating. And so those of you who would be following up on that, there are many problems in terms of those cards as releasing and delivering and all sort of other stuff. So one of those two wanted to exit. The founders wanted to exit. But at one point, they also want to further on investment, either further on investment or the exit, and they see what they can capture out of it. But the founders in that situation was pretty bad because they say, if you're not going to give us on further investment, we're just going to close up shop, right? Which is very, very not good for an investor. No matter, it's just not good. And then also so I didn't want to name the company. It's going to be one of the two because this is not exactly like all of this public information. So then eventually, we also worked out a deal with them where they were able to get on follow-on funding, and some of the investors, because they were scared from that, actually cash out of some of those investments for obvious reasons because they didn't want to be threatened by the founders again. And then there was this one company that we had called Mascot Secret. It was a fan engagement, in-game fan engagement company, and now they're being acquired, and then they are operating under the name Find Experience, Find EXP, and you can use them as Staples Centers and across all Live Nation stadiums here. And that one, it was interesting because they specifically, during negotiation, because of the relationship one of the founder had with the buying company, they specifically asked one of the investors to take on the negotiation. This is in addition to the lawyers that we hire for this process. So in that particular one of the venture partners essentially stepped up and did all the negotiation and worked out the terms. So I just really think like all of them are very, very different, and you really have to be company specific and then how the investors are involved. And also you have to take a look too, because unless you're the leading investor, a lot of the minor investors don't really have that much of a say at a certain point. So I don't know if that answers the question, but I think they're all very different. We really have to look at specific cases.
Thank you, Donna. And my next question is for everyone on stage, which is that when you look into a startup and you're considering doing angel investment, what's the thing you like look into very seriously? Like it could be multiple indicators. And would Jennifer start first?
Okay. So it's a pretty much a lot of times like I try to answer these questions in different ways because if you are my investor, because like if you are my LP, it's different story. Like I'm gonna show you my investment philosophy, how can I do this. And second part is like, some startup companies, like, when you approach me and I need to, sometimes I agree, invest you, sometimes you're hot, I need to chase you, sometimes like, I try to turn you down. It's pretty much different standards. But for my side, usually I'm thinking about it in two ways, like, what I can get from you. So that's typically a very important question. Like a lot of people think investment, definitely, I need a return. Yeah, you need to create, like you are unicorns, you're helping me to create a 10, 100 times return. That's one way. And second part is like, if I work with you, so how much like, I can help with you, help for you. So what you can get from me. So sometimes, it's people come to me and say, we're so perfect, and we committed by Sequoia, we committed a lot of things, and I think I just, I'm here, and I said, so I can do nothing with you. So I only have a 3 area I focus on, and your second round, third round, I can help. If it not helps, it just squeeze little money in. So that means like I'm not so much like meaningful investor for you. So when you think about this several times, and you will come back to me and turn me down. That's different two things. One, I can give something I can give you, and what you can give to me. That's exchange, and that in exchange need be very equal. So when they're back to more details, and I prefer the company, sure, you are, I know the business is gonna run in 5-10 years, and now you are in the really cutting edge technology, you have very cutting edge technology, and third one is maybe you have a great social impact. So when you think a case of a Hyperloop, so I know Zhen Funds invested in, and Zhen Funds is one of the considered the biggest early stage fund in China because they're backed by Sequoia Fund. And I was wondering, like I asked a couple of people involved in the deal and said like, you guys only invest in $500,000. Think about it, somebody created a train company and you only put $500,000 in the Series A round. So what do you think about this? So because one of the founders said, yes, we are interested in to get we want to bet on this and for future maybe hundreds and thousands returns. But we also want to support something related to impact, the social impact. Some impacts can change the world. So either we can benefit from it for social media coverage, or I can help you so a lot of people can think about this and open the new market for them. So one of my friends, I think one of the very close friends, we work together every day. He's early stage for DJI, so the drone company, the biggest drone company in the world, which occupies the 70% of the market. So at the beginning, this guy's how he met the deals. So he's just a startup fund actually called Lighthouse Capital, and these 3 people and think, what can I invest in? I'm not actually strong for approaching the big names. I don't know who is very, good at some areas. So he think about for a while and think, okay, I need to find the good people. Like I trust these people, and I know these people will run the business, and I know these people good at this. And he searched around find Wang Tao, which is actually the high school classmates with him. And Wang Tao's like, it's actually timing is searching for the money. It's very difficult. He's in the Hong Kong and just graduated and wants to support the drone's dreams. And they guys met for the, just a very interesting meetings. And this guy checked the Wang Tao and said, come on, this guy, I know he sings like in high school. I know he's like working for models and drones for many, many years. And I know he's good at this and got a great degree and working on this. And I think it's gonna take off. Then he will be the very early stage like investor for the DJI. So I think that's DJI, this one case and helping got over 200 times returns. So besides like, the business good fair house for and like, it proved a very good technology and we focus on the people. So sometimes you think something is very ridiculous. Think about if in 2008 someone approached you with Uber's idea, would you think it's a good idea? But when like Travers for a lot of time, he's a crazy and serial entrepreneurs, and you actually can see, we'll think another idea is like maybe because it's people, we want to bet it. So that's different things, different standards. But I think it's case by case. Mainly when we meet, when we like see the whole business things, everything will come to tables and we can discuss details. Yeah, thanks.
Okay, then Tony, please.
Sure. I guess the way to talk about this is, we as a venture capital firm, right, we're an institutional fund, and people entrust their money with us, and they expect a certain rate of return. So for us, it's return driven, right? We don't have any social angle, responsibility. Our mission is to generate the highest profit possible for our shareholder, and in the process, for ourselves. And I think the biggest opportunity to do that is by investing in early stage companies, right? Again, our fund size isn't all that big. Right? Think about it, we're a couple $100 million fund size companies. You take away the management fee, you charge 2% management fee a year, and it's a 10-year fund life. 20% of the fund is spent, right? You only get to invest 80% of the fund. You need to build a diversified portfolio, which means you need to build between 25 to 30, right? If you study portfolio theory, you need at least 25 to 30 companies in your portfolio to generate the maximum efficiency in diversification. And you also have to factor that you put money into stages, right? So Series A, Series B, Series C, etc. So the maximum value that we get out of our investment, I think, is primarily in the early stage. I'll give you one example, right? A couple years ago, maybe 3-4 years ago, this is a deal that I've been involved in since doing my tenure at WI Hopper. It's a search engine called Quixie. It's an app search engine, right? They're trying to solve the app discovery and app search problem, right? And when we came in, it was a young team, only maybe less than 10 people, and we believe in the entrepreneur's vision, and we made a bet, wrote a $1.5 million check alongside another Silicon Valley-based VC, and the post-money valuation was still in the mid-single digits, right? So we own roughly 25 to 30% of the company. That was Series A. That was 4 years ago, and Series B was, the company gained traction. It was 50 pre, 70 post. They raised $20 million. Series C, the company grew significantly, and we attracted the attention of Alibaba. So they came in, wrote a $50 million check. The post-money valuation was $650 million, right? That's where the company stands today. That's how the market valued the company. So but we got in at low single-digit valuation, like actually it was $5 million pre at the time. So we like to get in early, right? I think that's the most opportunity to generate your maximum return. And what we look for in entrepreneurs, so I guess that's a roundabout way of saying, if we generally shy away from companies that are too expensive, Series B, Series C, just because we don't have deep enough pocket to write those type of checks. But sometimes we make mistakes as well. I'll give you a very recent example. you all have seen that GM recently paid $1 billion to acquire a company called Cruise that makes these apparatus that retrofit a car to make them self-driving or autonomous driving, right? That was a huge acquisition. It was a successful serial entrepreneur that founded the company, but we actually met the company roughly 6 months before that acquisition. They were fundraising, and the pre-money valuation at that time was about $100 million, and we thought it was too expensive, right? So we missed out on a 10x return opportunity within just a 6-month period. Personally, I've done about 25 angel investments, some good, some bad. PayPal was good, but I also missed out when somebody tried to sell me Facebook stock because they thought at $2 billion valuation, I thought it was too high, right? So we all learned along the way. But throughout my career, I still think that the Series A, early stage investing is where it's at, which is also why 4 years ago when I joined the firm, we started doing seed investment, right? Making small bets, right? Without jeopardizing the main fund. And we've done to date about 40 seed fund investments. I think at the end of the day, just to reiterate, some of the other panelists have also mentioned, it's passion, it's an entrepreneur. In my career, every, I think, successful entrepreneur, if you boil down to it, it's come down to the entrepreneur. I personally had experience where I made an angel investment in a startup, right? It was highly contested. I had to beg to get in, right? So they finally say, okay, fine, we'll let you in. So I was very happy. And then 2 weeks later, after the fund closed, the CEO asked me, hey, let's get together for coffee. So I said, great, maybe he wants to give me an update on how the company's progress, how the round came together. I was really surprised. He actually asked me if I was interested in investing in his other startup that he's also incubating. Right then and there, I knew this company was in trouble, right? You can't have a CEO straddling, working on one company and trying to do something else at the same time. Sure enough, less than a year later, the company folded, right? So I just can't emphasize enough the element of people. So we think we're a pretty good judge of character, and we understand the dynamics of the team. And certain CEOs are good at raising money. Some CEOs are good at starting a company, but they may not be the best CEO to run the company after a certain point. But at any point of the game, the success and failure really predicate on the quality of the entrepreneur, and that's something we pay particularly focus on.
Thank you, Tony. And next, let's go to Kitty.
Early stage， 我们现在比较着重在地产还有旅馆。那如果说你有很好的旅馆给我们，那我们评估下来，我们可以帮助你在 operating 的一些 sense 还有 upside。所以如果说我可以利用我的各方面的关系帮忙把它 upside 的话，1年扣掉利息还有20% 的 return， 然后资产的价值2年可以 double 的话。我们都可以帮忙，我们很欢迎这样的 case 来找我们。我们 close case 也很快 ，upside， 然后把它 cash out 也很快。For example， 我们在2年前有一个旅馆，有人来找我们的时候是大概17个 million， 当时我们拿了500万出来。后来我们现在我们的资本额是买拉是700万，我们没有钱在里面，我们股东口袋还多放了700万。这个 case 我们 net profit 是20个 million， 赚2000万美金，就是要靠我们的团队帮你们去 upside， 还有去 operating。那地产也是condo 也是，我们就是有这样，就是互相帮忙。你有 case， 我们的团队经营，那我们的资金还有我们的各方面的关系，也希望可以合作，谢谢。
Thank you, Kitty. And last but not least, Donna, please.
So my firm, we are known as an early stage fund. We like C to A round, and we almost do more C than A. And so when you're that early, sometimes you really have nothing to go on but the entrepreneurs themselves, because that's all you can see. And then so you really have to be able to pick up entrepreneurs in a certain way because you don't know what they're going to do or if they're going to pivot in their company. So only until a little bit later can you be able to tell if the company is going to go anywhere. So one of I think one of the problem is that I think people as entrepreneurs hear this a lot. And the problem is presenting to VC funds is that the VC funds are seeing, hundreds, almost thousands of entrepreneurs every year. So you really just need to stand out. And I know you see on TV sometimes like the personality that stand out unless you have some superior technology or, it's kind of hard to stand out. So the real thing is, how are you going to get the VCs to know you enough in that initial 5 minutes they give you for you to even stand out, for them to give you the follow-on time for them to make the investment. And I think if you're an entrepreneur, that's what you really have to think about. And from a VC fund, sometimes we do take time to get to know entrepreneur. There was this one founder that I know really well, but he ended up working out because I knew him when I was an entrepreneur and I saw his work ethics. So when I joined this VC firm, I actually asked the firm to make an investment in him. So he is engineer background, but he's not as good in business development. But the first thing he does every morning is he makes those phone calls. So after seeing him do it for a year, I know he's a good founder, he's dedicated, and plus he's really thrifty, which we kind of like because we don't want entrepreneurs to be spending money throwing parties. Because sometimes they close a few $1 million round, the first thing they do is spend $100 on the party. I mean, I think not as much anymore, but I think there was definitely a time when I've seen that happen, and the parties were always fun. We had this other entrepreneur, we knew very quickly there was something special because when we looked at their company and their competitors, they were able to build the same thing as one of their competitors for 1/4 the cost. So they neither had to have certain skills or they had to have something special, right? Because they're able to do something that someone else couldn't, or at least not for at least 4 times the cost. So again, we really have to look at the entrepreneurs because at this seed round, sometimes there really isn't much to go on. And then just reinforcing what I think everybody else has said.
Okay, thank you, Donna. And I think we run out of our time, so thank you all the panelists on the stage. And thank you, everyone. If you need to know them, you can come over and exchange business card. And if you need to raise fund from them, after you need some talents, welcome to exchange card with me. Thank you.
Thank you, Yvette. And we would like to take this opportunity to present a certificate of appreciation. And let's give the speakers a round of applause again, please. Thank you.